We have entered the most important phase in Bitcoin. We are right at the bottom of a new inflection point in the S-curve. Cory and I both believe that we are at the bottom of an S-curve adoption here with Bitcoin. We are super early. A small amount of money coming into Bitcoin can still move Bitcoin in a material way. And now we are entering the most important phase, the most interesting and also the most entertaining phase that is coming to Bitcoin. We will see price points beyond $1 million, $2 million. We will see companies, corporations, and institutions, and even governments adopting and embracing Bitcoin. Bitcoin will be a regular talking point on every single news outlet, from independent media up to the state's media. So it's very important that we fight for it to be and stay decentralized and secure. Enjoy. What's the most important thing that you think is currently on a broad scale going on in Bitcoin?
Look, I think obviously we're going to spend a little bit of time later in the show talking about this recent Coldcard exploit, and we absolutely should. And I have some thoughts on that, especially coming out of, I don't know how long it's been now. It feels like a week, but it's probably been 72 hours or something that we've been kind of working near around the clock, just helping however we can. But you know, what really, and if you get past this near-term crisis and mitigation and hopefully recovery for some of the folks that had their Bitcoin swept out of old addresses, you know, what I'm really focused on this summer and beyond is just a big renewal of number of people go up. I think that as an ecosystem, we've largely just kind of abdicated responsibility for leading the charge on that. And I think there's a lot of OGs that have just kind of retired, you know, kind of hit 100K and it's like, I did my part, it got there and that was my exit and I don't have to do anything. And then I think there's just a lot of people that work in this industry that have just said, you know, okay, I guess the institutions are going to take it from here. So I'm just going to go work on AI or something else, or I'm going to go join one of those institutions and kind of do it that way and play the financialized Bitcoin game and, you know, at least have a nice salary or whatever it is. And, you know, I still think there's an extremely important role for Bitcoiners, and especially people that have been around a while. And I do think that there's a bit of responsibility, if you've benefited from Bitcoin, to continue to pay it forward and help get other people into the lifeboat. And so I wrote about this. I was really feeling it acutely in May, specifically because there was a rush of news day after day after day of like massive encroachments on freedom. You could just see it. There was the passage in the UK of the social media ban for under 16s, which of course means that if you're 16 and over and want to use social media, you have to produce your ID. A day or two later, there was a VPN ban in the state of Utah in the United States. A couple days after that, there was an announcement of like a dramatic acceleration in the timeline of launching the digital euro. So Panopticon, CBDC, spying on all your transactions, and just kind of on and on. Then, you know, the next week, early in the week, there was the rollout of age verification for the frontier model chat interfaces, so ChatGPT and Claude. And so your kids couldn't use it anymore unless you wanted to lie and say that it was you that was using it and asking about how exactly does SpongeBob breathe underwater or whatever. It's like you need age verification for your kid to use ChatGPT. And of course, they're collecting your ID along with that. So it was just kind of, it just really feels like Bitcoin is the final bulwark against the kind of inevitable momentum of governments to continue to try to grow. And this isn't even, it doesn't even require an evil cabal or psychopaths. It's just what organizations tend to do because the people in them want to make more money and have a boat and pay for their kids' school. And, you know, the will to power and the will to make more money, it's just what happens. And if you happen to work in government, unfortunately, you're funded by spending other people's money on other people. It's the least efficient type of spending, and it's the one that's enforced by the guys with the guns, right? So that particular type of organization is not like a company that can only grow by creating better products, et cetera. So it's just it's a really tough spot here as the governments around the world just keep on getting bigger and wanting more and more control, which is inevitable. So Bitcoin and cryptography and cryptographic tools generally, and sovereignty tools generally, have to stand up against this. And they do a great job of that. And we just need to make more people aware of that. And we need to flip this society and make sure that Bitcoin is ready and has enough capacity in the network, meaning number needs to go up a lot, number of people and the price over the next couple of decades to be there. To take over from a system that is speeding toward collapse at some point, And again, I'm really hopeful that it's not a catastrophic collapse, and I'd like to see a soft landing for the dollar and Bitcoin take over more slowly and just have the lines cross at some point. That would be ideal. But we have to be prepared for the other one as well. So the article that I wrote and published on July 21st, it's called The Battle for Monetary Independence. And it really is an updating of Swan's mission statement and kind of explaining to people why I do what I do and why I spend my time the way I do, following in 2020 writing 10 million Bitcoiners, the intransigent minority, which is the number of people that I think need to be pretty into Bitcoin in the United States to flip society here and make sure that the State Department can't coordinate a really big anti-Bitcoin push at some point. That's really the only entity on the planet that could actually coordinate something that would make Bitcoin go dark and make life really hard for Bitcoiners and Bitcoin companies. It's really just the State Department. So that's what I see as needing to be influenced or ring fenced or make Bitcoin look big enough and strong enough that they can't ever take that on, that they wouldn't rationally ever choose to try to do something like that. It wouldn't kill Bitcoin. You can't kill Bitcoin, but you could make life really shitty for Bitcoiners for decades until things flip back, right? Similarly, kind of an expanded thesis was in, I think it was early 23 or maybe late 22, was the race to avoid the war. And this is this idea that we actually are running a race where we are trying to get there before the government goes kind of more feeling too big to fail and like it has to do whatever it needs to justify. And that's kind of where China is with all the social scoring and the cameras everywhere and just kind of having however many people you think there are still in China, whether it's 700 million or 1.2 billion or whatever, kind of having them all under the thumb and unable to rebel in any way because the CCP needs to keep control. That's inevitably where these things end. We kind of have a uniparty in the USA and they're more interested in just kind of keeping control and keeping power more than almost anything else. That's kind of the dominant. And you've seen this. You've seen versions of this, in the Democratic Party in the elections in 2024, the way that was kind of stage managed to not actually have an election and just to shove Kamala in there after Biden obviously wasn't capable of running. The party selected who was going to be the candidate, not the people. And you'll see more and more like that in general as government gets too big. So the race to avoid the war is this idea that if we run fast enough and we do enough to spur adoption, then we never have to fight that war that I was talking about, where forces come together. Again, it would have to be ring-led by the US State Department and try to make life really difficult for Bitcoin and Bitcoiners. And then this new piece, which is the battle for monetary independence. And I'm glad you're learning about it, Robin, but I'll tell you kind of a synopsis. Anybody else can check it out at swan.com/battle. So what this is about is that, 250 years after the founding of the American Republic with the Declaration of Independence in 1776, it's drawing a parallel between the work of their generation being to establish political independence, and the work of our generation, not just in one country, but globally, is to establish monetary independence. And I think there is no higher calling right now. I mean, I also am attracted to working with frontier AI tools, and there's so many exciting things out there. And I left behind a career where I was able to do, a lot of varied activity to keep my mind stimulated and work on different startups and different verticals and be an angel investor and advisor. But there's nothing like working on something that actually has a true mission that can actually change things dramatically for the better. It's not another SaaS software startup. It's not another social network. It's not some kind of device. Like this is freedom money, and this is the bulwark against Leviathan. Like this is the work of our generation, is to make sure that this happens. And we have a lot of work to do, and it's early. There's 17 years in of something that I expect to take 80 to 90 years for Bitcoin to fulfill all three functions of money widely. Store of value, medium of exchange, unit of account. That's going to be a long, almost century-long project in my view. But we play our part, and this is what we are signed up to do.
Yeah, like if money is bad, it's really hard to have anything else that's really good. What I mean by that is like if you have one guy or like one institution that controls what money is and how you interact with that, it's very hard for society to use any other tool in a proper way. Like freedom is so important, and money is, I think, the most important aspect of freedom and sovereignty in general. There's other aspects to it. There's other important things to it. But if money and the monetary sovereignty and the monetary independence is great, it's very hard for the other things to be bad, if that makes sense.
No, I think you're right. I think these periods when we've had monetary stability for decades, or in very, very few instances, a century or two in human history in different societies, they have correlated heavily with times of prosperity and peace. It's not just causal, and we have to keep an eye on that. It's actually when you have peace and you have prosperity, it's easier to not hit the money printer. But what really messes us up is, as soon as it gets tough, it just seems like the easy fix briefly is to hit the printer. And then that actually makes whatever little crisis you were facing way, way worse. And then it becomes pro-cyclical, and essentially you go in the toilet. And so it's really hard for societies is to recognize, like, you need to take a little bit of short-term pain without hitting the money printer. And almost no one has ever been able to do that. And no one has ever been able to do that over the long haul, because you inevitably have somebody weak who doesn't understand the downsides and the fact that it's long-term bad, even if it feels short-term good. There's always somebody that comes to power that has the printer that does the wrong thing. And that's why we've never had a fiat currency last in all of human history. So, we do have this opportunity with Bitcoin to take it out of the hands of the people that are just human. And not everybody's born a genius, and not everybody can just like download, like in the Matrix, the totality of human history and how these things actually played. And even if you did, the history is written wrong for the most part. It's mostly written about battles and people, when it's usually a story about debt and bankers. Whether it's Napoleon or Chamberlain or just about anybody, it usually ends up being that the crisis was caused by getting offsides on loans.
How do you actually look at the current situation with the geopolitics? Because I think I'm still surprised that we don't have more money printing going on. Like it's like almost like with the Ukraine war, with the Iran war, with all the geopolitics that are currently going on. It's almost like they have to start aggressively printing in a very short amount of time, very soon. That's kind of my plebeian view of what I see when I look at politics, when I look at the situation, and when I look at like what's going on with Trump and the printer.
So at the very highest level, what I would see is, let me draw a parallel to 2007, 2008. I remember I injured my back for the first time in right around New Year's 2006, 2007. So I'm like 30 and I'm feeling old for the first time. I'm like, this sucks. And, sitting around watching Netflix DVDs before streaming. And a friend of mine, who's my former roommate, was on the distressed bank loan sales desk and then all of bank loan sales and all of that. So he was on the same Goldman desk for like 24 years. Not 24, I guess he started in 04 and he just left beginning of this year. So did about 22 years there. So he pointed me toward the Bill Gross, the PIMCO Bill Gross, not the IDEO Lab, whatever, Bill Gross, in the beginning of 2007. And it was all about the subprime crisis and basically saying that sector was completely wrecked. And, I tracked it from the very beginning just because someone randomly was right in the center of it and said, if something is going to make this train go off the tracks, this looks like it's going to be this. And I never, obviously, I guess I kind of had a sense that the dot-com boom was frothy back in 99, 2000, but I was also too young. I was a 98 college grad and didn't know my ass from my elbow. So, I wasn't really like seeing around corners, and I also didn't have any capital to matter to be thinking about where to put it at the time. But I was actually, out in front watching the GFC build and metastasize from its little pocket. Now, I mention this because that was the only real source required to cause the GFC. Today, there are at least 3 major kind of side pockets where risk is being just shuttled off and hidden and being used to kind of paper over the deficit. And, any of them are more than large enough to cause something much bigger than the GFC. And I think the inclination of all the people that have their hands on the strings is just to kick the can down the road. None of it appears to be being solved. So, I would kind of tick off the financing of the AI infrastructure build out as one major source of risk. This is not a black swan. This is a gray swan. We know exactly what it is, and it might collapse, and few people understand it, but it is identified. So that's not a black swan. It probably will happen and probably will blow up. You have the circular financing deals. You have the off-balance sheet deals that looks very much like what Enron looked like before its major blow up and accounting scandal in 0102. You have these circular financing deals where essentially revenue from Anthropic shows up as revenue for NVIDIA, and then it gets cycled back to Anthropic, and they just kind of go in a circle. And you have the majority of GDP in the United States over the last 18 months driven by AI spend of epic proportions that they can't afford. You have a massive software company run by one of the richest guys in the world, Oracle, with Larry Ellison, and the company is 6x leveraged. So 6 times more debt than equity. That guy's not going to lose some of the things he has in his personal name, but it's possible that Oracle completely goes under and you see somebody for the first time in history go from being worth, a couple $100 billion to like a couple billion. Huge hit, I know. He'll still have his island and his yachts and things, but his paper wealth could very well get completely wiped out in this next eventual, retrench. And then, you were kind of hinting at, conflicts and how much spending goes into just creating planes and drones and anti-missile interceptors for the wars in Iran and Ukraine. And obviously that money is coming from somewhere, and the bill keeps on getting racked up. I don't believe the numbers that they tell us. I'm sure there are all kinds of off-balance sheet black ops little pockets and ways to compensate the defense manufacturers with this, that, or the other that you don't even see anything close to the real total. And then it shows up much, much later when they revise the numbers a couple of years from now. And you're like, oh, wow, it was actually 150 billion, not 42 billion. That's pretty much what happens in these things. So I'm sure we're way outspending, and all you are doing at the Fed is basically moving, like 3-card Monty. They're just moving the ball under a different cup and moving it fast and kind of hiding it. And so now we have by far, the only thing that people will buy right now among treasuries in large supply are the shortest term treasuries. They're buying the 1 years. And we've never had more debt in history by far. It's just astronomical how much we have to roll every year and replace with new demand for these 1 year treasuries, these T-bills. And that then shackles the Fed and means that they can't let interest rates rise because we won't be able to afford the financing on those if we let interest rates rise naturally. So then you have to have an actual physical cap because of the borrowing of the US. We have a fully managed economy and money isn't free, et cetera, et cetera. So, those are the three big buckets of risk. I don't think the last one elucidates everything that's going on with kind of the Fed and the Treasury and just stuffing the balance sheet. We just passed 40 trillion of debt in the US, et cetera, et cetera. But broadly, I see those three things. I think there's just this inevitable, probably bubble popping, but at least massive retrenchment in the AI sector. There's tremendous spend going on for military adventures. And then there's this constraint on the active management of the money supply and the debt, and the diminishing of the options available to continue to kick the can down the road. And again, any of those three is actually worse than the conditions that were present in 2007, 2008, should they unwind and kind of end up there. So yeah, I agree. I think it's a macro environment that is fraught with risk.
It's a really good points, especially like also the AI point that you made, because I think a lot of people are not aware of that. I've been made aware of the Nvidia situation, I think, like a few months ago, where I did not know how screwed up their customer and supplier vendor management is with debt, where it's like, if there's the ball starts rolling and there's a small companies that do things and they lend them all that machinery which they book as fully revenue and profit, if that gets up, Nvidia can implode. It's something I think a lot of people are not aware of. It's a side note to that, but are not aware of, if they invest in Nvidia, how big the risk actually is and how little the upside, because they're already one of the top 1, 2, 3 companies in the world in terms of market cap. And then there's major risks to how they do the customer and vendor management with the debt that they have. So little upside, but a big question mark to the risk with, side note, Nvidia.
Yeah, there's just if you look at, I think it's over half of the market cap of the S&P 500 now. So if you basically if you take the S&P 500 companies and you start at the top and you rank them by size, over half of the S&P 500 now trades at higher than 10x sales. Not EBITDA, sales, revenue. By market cap. And that is a flashing red signal historically of overvaluation, but it also shows that people are storing their money in the stock market. We all know that this setup is basically too big to fail for the US government, because so much of the US government's tax receipts that pays off the interest on the massive debt comes from capital gains. So they actually need the price of these stocks to go up so that they can tax all the people who own the stocks through cap gains tax to be able to keep paying the debt. So we can't afford as a nation for stocks to go down. Otherwise, we can't pay the debt. And it's also where all the people's retirement is. And so if you want to avoid, a populist revolution, or you want to avoid the largest socialist party in the last 50 years of the United States, 10xing from 120,000 to 1.2 million and beyond, with Ocasio-Cortez and Bernie Sanders and the commies like Mamdani, good luck, because that means that you actually can't afford for the stock market to go down. You literally can't afford it, because then everything breaks. So we have completely tethered the US political system to the stock market in every way. And this is why there is this increasing merging of the interests of the government and the corporations, and why they work in concert, and why they join committees and come to DC all the time, and the government increasingly taking stakes in these companies, and the companies like OpenAI begging the government to take a stake in them to protect them. This is not pure capitalism in any way, shape, or form. This really is corporatocracy, or kleptocracy, if you will, cronyism. It's the merging of the state and industry, which interestingly is basically probably the cleanest, simplest definition of fascism, is actually the merging of the corporations with the state. And it's this path that we have been charging down for quite some time here in the US, and it's accelerated dramatically in the last few years.
I wonder if there's ever a great rotation out of that into Bitcoin. Because like they need those stocks to go up long term. And of course, there's also this thing that I mean, it's a slow process, but like companies adopting Bitcoin, we have, I think, Tesla and SpaceX. I think they are the only two companies in the S&P 500 that have Bitcoin on the balance sheet, and only a little bit compared to what they could have, of course. So, like, how do you see the dynamic between equities and Bitcoin?
Let me put it this way. It still doesn't take very much capital to make the nominal price of Bitcoin go up a lot. It's just, it's still a very small asset, and, plowing a few tens of billions into Bitcoin at any one moment in time by any single entity or a group of entities that kind of do it over a short period of time would be making your own weather. Because if you do it and you start buying it up, and you buy it as it goes like this, and then you basically cause a rush into the asset, your balance sheet is going to go up tremendously, and it's something that you can spur and get done. I don't know that it's going to come from a company, and I don't know that it's going to come from a government. I do think that there's probably more of a chance that it comes from someone, an individual or a family that actually has a lot of money and ends up getting orange pilled. So if I were kind of handicapping who's most likely to do something like that and just come out and, buy $10 billion worth of Bitcoin, I think it's probably more likely somebody that makes their own decisions. So like a principal, not a committee. But we'll see. I mean, we know the candidates are out there. It's, every founder of one of these multi-hundred billion or $1 trillion companies, and the legacy families, the 8 splinters of the Walmart fortune, and there's plenty of Mellon money and plenty of Rothschild money out there, and somebody's gonna make the call at some point and just kind of see it the way that Druckenmiller and Paul Tudor Jones did in 2020, and the way that lots of other people have since. And Elon and people around him clearly see it, despite, I think, him being kind of handcuffed by his position, requiring cooperation from the government, and not being, whether he's been nudged or just understands the writing on the wall and knows that he shouldn't pump Bitcoin because it's bad for the people that pay his bills and invest in his companies, et cetera. That would be kind of the natural one. So they're just kind of quiet about it. We'll see. I don't know. What I do know is that, among the people that we get into Bitcoin, so spurring, again, Bitcoin adoption, number of people go up. That is how you get people having someone in their circle. Someone with a lot of money ends up with someone in their circle who knows a lot about Bitcoin, who they trust, and gets them to go down the rabbit hole themselves. And that's how it works. You always hear any of these, high finance types, the rich people, whenever they talk about it, every single one of their origin stories is about somebody getting them to take a look. 100%. Not one of them started with, Swan Signal or the Rob and Seyr podcast. It's always a person that says, hey, look at this.
Yeah, and I think I mentioned it on the podcast previously, but I've asked so many people that came up to me like, "Oh, how did you get to know about my podcast? How did you get orange pilled?" And I didn't heard a single person of like, "Oh yeah, I didn't have any interest in Bitcoin. I saw this Bitcoin video of yours, and now I got orange pilled." It's always you had an interest in Bitcoin before because there's a guy in your environment or a girl in your environment that actually spurs your interest. It's very rare that you got that from just the internet, just someone was triggering you in your environment. And then like the podcast is kind of like once you have the interest, the first thing to go down the rabbit hole, the books, the podcasts, the spaces, all those things. So I feel like we're the second, third touch point for people in the Bitcoin rabbit hole, and not the first one, not the one that actually creates the interest in a person. And that's actually a great point, because no matter if you want to have individual adoption, corporate adoption, whatever you wanna like aim for, it always is individual adoption. Like no matter what you are aiming for, individual adoption is the base of everything. Because if you think about a company, it's also just a bunch of people. Like if I don't know, there's a board of 10 people that make the decision for a company if they put Bitcoin on the balance sheet or not. Those 10 people, if they all don't have Bitcoin in their private life, the chances that they put Bitcoin on the balance sheet of the company very, very small,
Yeah,
non-existent. If they all have Bitcoin in their private life, the chances there are a lot more that they actually also put it on the balance sheet.
absolutely. Yeah, look, it requires humans, and inside any of these companies that have adopted Bitcoin in their way. I mean, you look at BlackRock, and there were 5 years of a couple of Bitcoiners deliberately calling their internal employee group, the blockchain group, even though they didn't care about blockchain, but they had to steer the ship like very, very slowly. And in the end, it resulted in Larry flipping and wanting to do a Bitcoin ETF. But it's because there were a couple of orange pilled guys inside of there. And I see this at so many companies, because they all get in touch and tell me that they're secretly working for Bitcoin inside, the fiat machine or whatever, and asking for resources or help or a presentation or whatever it is. I think maybe it's funny. I should probably talk about this more. I mean, if there's an intersection of like, for better or worse, like resume with fiat credibility, but also being a super Bitcoin nut, I'm pretty credible on that, given where I worked and, being maxed out on my LinkedIn connections and all that kind of thing, and working for McKinsey and Google, et cetera. But, I'm still in touch with a lot of these people, and we serve a lot of these executives as clients. In fact, that's kind of, one of my favorite things about Swan is, there's a lot of companies that will get a little Bitcoin for the company, and they'll just buy it from DRW or NYDIG or something. But the executives themselves, the C-level folks at these companies, are usually Swan clients, which I think is really cool and kind of speaks to what our mission is of actually serving individuals and families and making sure that they're well supported. Because a big company, the treasury team and the CIO's office, they're supposed to handle that. That's where the fees go. It goes to the salaries and the bonuses of the people on that team. And so obviously they should try to get everything as cheap as possible, and they don't need any hand holding because they hold their own hands. It's a big team. So I do think it is, the mission of Swan and companies like us to be that team for families and smaller companies and owner controlled businesses, and make sure that they feel supported in their Bitcoin journey.
Do you think there is a big wave of adoption to come again to Bitcoin of like on a, because I give you a little bit context what I mean with that, because I came into Bitcoin in 2020. I was aware from it 2017. 2017, it was hard not to talk about Bitcoin. It was like I was 19 at the time. I was in a classroom. Like everyone talked about Bitcoin. It was crazy. It was like in everyone's mouth, even though back then I was not even invested in Bitcoin. Then in 2020, I got into Bitcoin. In 2021, it was again very crazy. Like everyone was talking about Bitcoin. We had the whole Elon Musk thing. It was really, it felt like there's a lot of things happening all at once. And then from 2020 onwards, 2021 onwards, it didn't feel the same as before. It felt a little bit less individuals are interested in Bitcoin. Of course, like there's always new people coming in, and 2024 was also great with like the 100K and all of those. But it feels like we are kind of stalling in a way of like the individual adoption of where people are coming in, and it's more institutional adoption.
I think we shouldn't look past how badly kneecapped the bull market of 2021 was by all of the recruitment of Bitcoin demand into the CeFi lending platforms like Celsius and BlockFi and Voyager, et cetera, and 100 other ones around the world, and FTX at the very top doing the most of it. And I think that it just siphoned away a lot of people and a lot of demand and got them into Bitcoin through a very bad path that really harmed them. And it kneecapped the rally from a retail adoption standpoint. The retail peak was actually April of 2021. So it was extremely early in the cycle. And the echo bubble was basically just algorithmic buying on Binance, trying to drive up the price of Solana, essentially. So they supported the price of Bitcoin, essentially to pump Andreessen and Friends Solana bags. And that was a lot of SBF. And Alameda actually running that algo, it appears, in the summer, after it went down to 29, that echo bubble was not much retail participation going up to 69 by November of 21. So, really, and then after that, it was, I don't know. I mean, I guess it was probably, if you think about it, it was probably the announcement of, you could see by May of 23 that BlackRock was going to get their ETF because the SEC was responsive and told them exactly how they needed to do it and told them that, hey, if you do it as a grantor trust, you'll get this through. And, it was a done deal that there were going to be Bitcoin ETFs soon. False narrative alert. It had nothing to do with GBTC and Grayscale's case against the SEC. That was already a done deal. All that won for them was that they could change theirs into the same structure that was being granted for BlackRock and Fidelity. So I think what happened was in January 2024, when the ETFs passed, in my view, that was 4 to 6 years before I expected Bitcoin ETFs. Like if I were looking at Bitcoin in 2021, 22, especially with the FTX collapse and just the exposure of how shitty and criminal most of the crypto industry was, I didn't think that we would get ETFs until the end of the decade. The fact that BlackRock flipped and decided to jam it through, and of course they had 575 of their 576 ETF applications approved. They basically tell the SEC how it's going to be, and the SEC tells them what to write to get it passed. There's two sides of that coin. There's institutional adoption now, and it makes it easy for companies and hedge funds and long short funds, et cetera, to buy this ticker in their brokerage account. It made it really easy for retail to access Bitcoin. What it meant is that the new wave of institutional and retail buyers didn't understand what they were buying. By definition, they don't value the difference between real on-chain Bitcoin, self-sovereignty, a bearer asset versus a paper IOU where you have to ask for permission to move it and can't get it out into the real thing. So the fact that they're buying an ETF in the first place tells you that they will have lettuce hands because they don't value this thing. On the institutional side, and frankly with the high net worth side as well, if you're buying a Bitcoin ETF, it's the asset in your portfolio that you understand the least well, almost for sure. It's the last thing in and the first thing out. And so essentially, because it came so soon and you didn't get another cycle of Bitcoin adoption and education promoting real on-chain Bitcoin for long-term hodlers, essentially humans, just individuals buying and holding Bitcoin for the long term. And essentially the education responsibility, and really the responsibility was abdicated a lot from kind of 23 to present. And then I would say the opportunity was kind of taken away because all of the talking head slots in the media essentially went to suits. And, whether it's treasury companies and Seyr or just ETF promoters, that whole theme basically took over. And I don't think that there's good education about why to actually buy and hold Bitcoin for the long term. It's mostly just about where it should sit in your portfolio, and you balance it, and maybe you have 3% here, and if risk is off, then you go down to 2%, and it's just kind of like this thing that's in a portfolio, but it's not well understood by the people that have bought it in the last couple of years. And so again, this kind of feeds into why I wanted to do everything in my power and put all of Swan's energy behind this renewed effort to spur actual number of people go up and spur a new adoption wave and really get out there and understand that in a bear market, when Bitcoin is down, that's the best time to get somebody into Bitcoin. It's way easier to have them pay attention if they see number go up sometime in the next year that they buy. And risk adjusted, I think where we are on every single indicator pretty much is that we're at or somewhere near a bottom. And if people buy a little bit here or buy a lot here or dollar cost average in over the next few months or whatever it is, you'll probably look like you were a good friend to them in a year or 2 years. Not financial advice. Cycles won't last forever, but it appears that we're still in cycle territory for now, and this looks like a really good time to get people into Bitcoin. So I'm just I'm all about it. We're going nuts. I'm doing Cafe Bitcoin every day for 90 minutes, and most of those I'm actually hosting myself, which is pretty cool. Haven't been able to do that from a time perspective in quite a while, but I think this is a really important time to get the message out and let people know about Bitcoin.
With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I agree. It's like if you bring someone in, it's always a good time, but it's a way better time if it's at or near bottom, because then in the next 1 year and 2 years, you have an upward swing. And I'm not a big fan of like analyzing charts or anything like that, but because people ask me about that, I looked at all of that, and it's funny because no matter what you're looking at, 200-week moving average, power law, any on-chain analysis, like whatever you like to look at, all are telling the same thing. Like we are quite we're very deep, we're very down in a deep value zone, what I would call. But again, I don't like to look at charts because I just wanna accumulate Bitcoin no matter what. But if you're looking that way, all the charts are saying like it's a great time. And so if you think about that, and you're seeing people and you're seeing someone having an interest in Bitcoin, it's now literally the best time because they will have a way better experience with Bitcoin in the next 1-2 years. And if someone is 2 years, 3 years exposed to Bitcoin, he will get educated. He might buy a book. He might listen to a podcast. He might do all of those things along the way and learning when it goes up and hearing about the crashes, hearing about all those things, and hopefully be prepared for the next crash and have a lower cost basis because he entered lower. Like there's all those small side effects of getting more people in the bottom, but it's the hardest time to get people in because everyone is saying like, oh, it's down, it's so bad, like there's no good news. Like it's the best time to orange pill, it's the best time to buy Bitcoin, but it's also the hardest to get people in, the hardest to buy.
And I have to caveat, as always, when you're talking about these model boys, don't trade these models. They are best fit lines on historical data, and they don't have predictive power and never have. And that goes for the 4,800 different versions of stock to flow that seem to change every couple of days and always have. And that goes for all these various versions of power law models that barely deserve the appellate model alongside of that. So no predictive power. They're lines on charts, and they accurately describe historical data, but can't really help tell you where and when to enter or exit a trade. So I wouldn't trade based on those. What I would say is like vibes, on-chain data, your favorite, European model charlatan, whatever it is that helps you get to the conclusion that now is a good time to buy Bitcoin. And remember, if you buy the tops forever, you also do really well. We've run those numbers. Like if you slammed a big chunk down at, 1,100 and 19,700 and 69,000, and like you'll end up doing just fine over the long haul buying tops too. So I've been buying every single day for the last, 5 or 6 years. And I just think that's the best way to do it is just buy the whole curve. You essentially buy you're basically just buying the 50-week moving average forever that way. And you'll always be up in the long run. If you believe that governments will keep printing money, you'll probably do fine building a nice Bitcoin position over time.
100%. It's like DCA is by far the best strategy, just because it also removes. And also, there's one more point in there that I wanna make is I don't like trading at all. Like selling is like for me always a bad idea. But even like timing the entries, because it moves away your attention from creating value and saving that value in Bitcoin to how to end the Bitcoin. You know what I mean? It's like I think life is best if you just focus on creating value and then just storing it in the best medium to store value ever, which is for me Bitcoin. So I feel like it's a wrong focus to see like when to enter, when to exit. I mean, exit for me doesn't make any sense at all, but like when to enter also.
You exit into paying for college for your kids, or buying some a nice steak dinner on vacation in 2035. That's exit. I mean, at the end of the day, like it's so easy to be essentially 100% Bitcoin at this point for most people. I mean, you don't really have any excuse if you feel that way in the West. I mean, it's really easy to keep basically as much of your assets in Bitcoin as you want because it's so easy to pay for things in Bitcoin with credit cards and debit cards that just debit your Bitcoin balance. It's not hard, and the tax reporting is perfect. And you send it to your accountant or just upload it into your accounting software, and it's just not a big fucking deal. I don't know why people think that it's such a big deal. It's just not. Now, obviously, it's going to be awesome in the future when there are a lot more merchants that want to hold the Bitcoin that you give to them in Bitcoin and not just exchange it into their local currency. But again, that's person by person, number of people go up. You can't force thousands of merchants just because they accept Bitcoin to store the value that they receive for that transaction in Bitcoin without them actually understanding Bitcoin deeply. And that's a person by person, down the rabbit hole undertaking. So it's always been ass backwards. And we've kind of known this from the big blocker days and the Bcash people and whatever, like trying to jam merchant adoption through doesn't matter at all. Cause, you know, I just spent 4 nights in Paris for a wedding, and I never once touched a euro or even thought about it. Not even once. I paid for everything with credit card, and the merchant took euros and I spent dollars. And it's all translated in the background. So this whole idea that, you know, medium of exchange at the merchant transaction level, like, matters has always been ludicrous on its face. And we know that. So it's just, you know, I think it's great for hobbyists. It's great for marketing. It's super cool. It is fun to go be able to spend Bitcoin at stores that take it. And that is super fun. And I do love having like a little balance on a Lightning wallet and trying it out. And like, I still get kicks from that. But, you know, to think that that matters even the 1% as much as people buying and holding Bitcoin to store their wealth at this stage, early in the adoption curve of Bitcoin as a store of value, it's just, it's just a fool's errand, unfortunately.
Yeah, like the whole value from like people always bring up the peer-to-peer cash thing, but for me it's like, what is the real innovation of Bitcoin? And for me it's not digital digital transactions, like that I can transact digitally. For me it's that I have something that nobody can take away, that is sovereign, that cannot be manipulated. That aspect is for me the real innovation of Bitcoin, and that comes to store value and all of those things.
And look, I mean, you need little theme parks essentially for people that are really into something. And that's what these circular economy, you know, Bitcoin jungle, Bitcoin beach, these types of places around the world where people want a bunch of merchants to take Bitcoin and you can get Bitcoin tourism. Like, that's fine. You're supplying an experience for people that want to pay for it, and they come and they buy a property or they book a hotel, or, you know, they do ayahuasca and also pay for, you know, the shaman in Bitcoin or whatever it is. Like, but let's be clear, that's not doing anything really much for Bitcoin. It is in its way, because you're giving people like the experience of what the future will be like when everybody pays for things in Bitcoin, but it's very hobbyist. It's very kind of like late 1970s in the PC era. It's like the homebrew computing club. It's kind of that stage of, it's not 1993, the Netscape moment of the internet. This is, you know, 17, 18 years before, which is why I always say, you know, there will be like a 2-decade lag between store of values S curve, and then, you know, when you're kind of near the top of the store of value S curve, and we're at the bottom of the inflection point where we're just starting to go up the steep part, hopefully in the next, you know, 10, 15 years of Bitcoin as a store of value. Only when you're kind of at the top of that S curve and Bitcoin is probably 1.5 to 2 million USD per coin will you see medium of exchange start to hit its inflection point and get off the flat part of the curve at the bottom there. And then it'll be another 2 to 3 decades after that before you start moving on the unit of account S curve.
100%. I'm curious how you look at the phase that we are currently in Bitcoin. There is the Coldcard thing, which is the self-custody thing, and we can talk about it afterwards a little bit more. There is the BIP 110 thing. There is the treasury things, the suit coin summer. There's the like, as with that is a stretch and all of those things. It seems like there's a lot of debate and heat in the Bitcoin ecosystem. There's a lot of moving parts as someone that is just like in Bitcoin every single day. Is that a very important phase that we're currently in Bitcoin, of like building what Bitcoin actually is, how we build on top of Bitcoin, how the Bitcoin ecosystem is evolving?
Well, broadly, we learn what Bitcoin is by trying lots of different things, because my opinion isn't necessarily correct until the market determines its correctness. And so if you take the last little thrust of like, what is Bitcoin on your list, you know, the leverage Bitcoin equity companies, Strategy and Strive, are the only two that actually function as leverage Bitcoin equities and actually have leverage on top of a big stack of Bitcoin. Everybody else is subscale, didn't get there, or pretending, in the US anyway. You know, they basically went probably a bridge too far, talking about, I mean, digital credit was kind of okay because it came with a lot of caveats, and they said, you know, I know it's not credit, I know it's a hybrid equity, and, you know, but it kind of acts like credit and people are using it like credit. But then they started using the language of savings and better than a money market, et cetera, which was very kind of Celsius-Mashinsky-esque. And then it got worse when they went to digital money, which was like a derivative of a derivative with 7 or 8 different layers of risk on top of it. And you know, Seyr came out and said, like, we turned Bitcoin into digital money. And it's like, hold on, I'm pretty sure Bitcoin is digital money. That might be a bridge too far. But we didn't even need to actually fight it out, because a couple of weeks later, the market just smacked them all in the face and, you know, cratered their digital monies, whatever, from par, and made it very clear that these are equities with lots of risks, and there's no actual reason for them to necessarily trade at 100. It can be a management target, and they can do promises and active management, et cetera, but, you know, it's just going to free float like anything else. And these different preferred equities that Strategy has launched, and the one that Strive has launched, they will float. And, you know, there's no magical reason that they're necessarily going to be pegged to $100. So I think that's just kind of, the market solved that for us, and they got kind of smacked around a little bit. And there's not going to just be a bunch of retail savers, thank God, plowing into risky equities, thinking that that's a better savings account. You know, it's an investment, just like anything else, and you can trade it. You can choose to hold it for the long term if you really believe in it for whatever, or you want the dividends. But, you know, it's a dividend paying stock that comes with a lot of risk. And the market is telling you that it's an extremely high risk instrument, which is why the interest rate is so high. So it's trading worse than junk. And it's, you know, basically mezzanine debt, which is usually how you finance like a single hotel in the suburbs in some random American city. It's kind of like that level of risk.
Yeah,
So,
100%. It's like it's a
yeah.
security, not a not a
Yeah,
thing.
for
People
sure.
forget that.
Yeah, so that's that one. And then I think, you know, obviously we should touch on Coldcard, and there was one more that you mentioned. I was figuring we'll save Coldcard for last, but what was the second one? Do you recall?
BIP 110, the debate.
Oh yeah,
around,
yeah. So BIP 110. I mean, what's the activation date? August 8th, I think.
Currently, I think August 8th it is around-ish.
Yeah,
It's jumps a little bit around, of course.
Yeah, so we're recording on Monday the 3rd, and so it's about 5 days away. That would be Saturday. The last I saw, not that I trust anybody's numbers, was something like 2.4% miner signaling. So obviously it's not going to be 55%, but it's also not going to be zero. And so then kind of we'll see. You know, I haven't gotten involved other than to try to be a little bit of a question asker and an elucidator. And I will moderate a conversation on Cafe Bitcoin. I don't know when we're going to schedule that for, either later this week or next week, just to have some of the people that, you know, really understand this deeply and or are on one side or the other. And, you know, I'm a very capable moderator when it comes to situations like that. So I'm looking forward to having that conversation. But I just haven't been sold well enough by either side. And certainly I have plenty of other things on my plate. And so I'm just kind of not into it right now. And I understand that upsets some of my friends on both sides for not taking a strong stance on it. But at the end of the day, I don't think either side knows what's going to happen and what the second and third and fourth order effects would be either way, because we've just proven time and time again, even with things that we were much more certain about, that we had no idea what the second, third, and fourth order effects of those things were going to be. And they were unquestionably good, and, you know, haven't necessarily ended up being that way. So, you know, do I have quibbles with Core? Do I have a lot of sympathy for pretty much everything in Hodlonaut's essay series? Yeah, I do. I have real quibbles with how Core has operated and how they've hired and the type of people that they've put in and the way that they hire people. I think there's ample room for criticism across all of that. And count me as one of those voices that doesn't like a lot of things that they've done over the last few years. But I do think that there are ways to correct that. And, I think we're seeing that anyway. And I do think that the fight in general, if you were completely, put it this way, like, let's say that you were just like on a boat with no comms for like 2 years and you had no idea, and you left, 12 months ago. So you had no idea that BIP 110 was coming or was even an inkling. You were even, I think the V30 change was just last fall. So you missed that too. So you didn't even know about the increase in op return, from 83 bytes to 100,000 bytes in the defaults. So you missed it all. And then you come back, this time next year, summer of 2027, it's all in the rear view. And let's say that BIP 110 failed, but you read about it and you catch up with your friends and you see what the fight was all about. I think you would say that was good for Bitcoin. I think you would say that, people rising up and saying like, hey, it's not going to be that easy to jam shit like this through in the future, and that you better fucking listen and not just do things kind of willy-nilly and not play the authority card. I think a lot of people in the industry have been rightly removed from kind of, golden icon pedestals that some had them on, and have just been seen to be fallible humans with varying financial motivations and activities, and can't be looked on to just be arbiters of what's right and wrong. I can't point to a single person in Bitcoin anymore where I'm like, oh, I trust them. Not one. I can't say there's a single person that I actually trust their judgment on all things related to Bitcoin. And I think that's how it should be. Not even my best friends, not a single fucking one. No one that got me into Bitcoin, nobody whose book I absolutely loved, whose podcast educated me. I am opposed on some issue with every major figure in Bitcoin, as it should be.
Which is healthy.
Yeah, it is. And, getting to that point, what's interesting is like, it then makes you kind of re-examine your priors and think about, okay, well, if there's nobody that I'm 100% aligned with anymore, can I go back and re-examine all of the other people that historically I kind of wrote off, or, because I didn't agree with them on something? Maybe that's just what longevity in this space brings you, is that you will always disagree, and then you'll have nobody left that you like at all. So then you can go back, and now you have like this long list of people. Like I've enjoyed, sparring 3 summers in a row. By the way, I always do a Vlad Castella summer podcast when I'm over in Europe, and I always do Vlad's show, who argues sometimes with good points and sometimes with horrible and misleading points with lots of Bitcoiners and Bitcoin maximalists. But we get along really well. And we have a good show, and we chop it up and we argue, and like, it's actually kind of fun. And, I had I think people would probably assume from the outside that I wouldn't get along with like Brian Trolls if I met him in person. Not true. Really enjoy talking to that guy in person. Not always going to agree with them online, but I think you can tell when it comes down to it. And this is maybe a good segue into the Coldcard discussion. A lot of the people that I think that, Bitcoiners or Bitcoin maximalists would have said, are kind of the trolls, or the people that are always hating on them or whatever. A lot of those people are the ones jumping in with the most effort over the last 72 hours and helping with education and helping save people and giving of their time, and educating people. It is a lot of people that are, maybe socially inept and big time assholes, but also deeply technical. And it's great to have those people around. There's only so many people that are, like Jan Pritzker, my co-founder, who's deeply technical and a world-class security expert, and also completely hates shitcoins. That's extremely fucking rare. There's a lot more people that are deeply technical that work in this industry that play with shitcoins and do shitcoiny things. And, and those people are helping a lot when it comes to this Coldcard exploit.
Like,
So,
this is actually like a thing I realized. Technical people are often the ones that shitcoin the most.
well, they can figure out how to make money in shit coins because it is deeply technical when you do these, whatever it is, launching coins, MEV exploits, hacks, like, even running lots of bots to pump a coin. That's usually a fairly deeply technical undertaking to do at scale. So it's always been people with a good bit of tech expertise that have been running these. I mean, think of, or at least being able to talk the game. Some of the most successful shitcoin founders that have had large market caps before their dumps have been people that at least sound to midwits as if they're highly technical.
I have one question, or like, I'm curious how you think about that. I saw that today. I haven't verified all the numbers, but I think they're roughly right. Of like Bitcoin lost on centralized things, and you mentioned, I bring it up because you mentioned before Celsius, FTX, and I think BlockFi you mentioned. And now the scale of Coldcard, as of this recording, as I understand, is like 1,300, 1,400 coins or something like that. And if you compare that to past events where there's hundreds of thousands or tens of thousands of coins lost through exchanges, is that kind of, is it almost surprising for you? I mean, it's a horrible sentence to say because like the 1,300 Bitcoin is a lot of Bitcoin, but is it almost surprising that it's just 1,300?
So look, it's because the reason. So thanks. I think it was Julian Figueroa that posted this, and appreciate him putting it out there just as a reminder. And it's a nice little retort because you have kind of the fuzzy Bitcoiner crew, kind of like the Nick Carter Stars Rising types, pointing at this and saying like, just being a Bitcoiner is dead, or Bitcoin maximalism is dead, and they led you off. And they basically sound like Mashinsky back in 22, trying to get people to send him their coins and saying that Bitcoin maximalists will lose you your coins or whatever, right? And you do have to remember that what did that sum up to? It was well more than 1 million coins there that just got lost on these centralized exchanges, including post Mount Gox, something like 400,000 or 500,000 coins. Like, it's a lot, maybe 600,000 coins post Mount Gox. So even forgiving the industry's earliest days when there was no other trading venue, even since then, you had, basically like every Bitcoiner in Dallas Fort Worth area, because Voyager was promoted through the Mavericks and Mark Cuban, just got fucking wrecked. And obviously a lot of the the Nick Carters and the Dan Helds promoted BlockFi so vociferously back in 21, 22. So I think what the contrast is that Bitcoiners always recommended against using those platforms, not Mt. Gox necessarily, because there wasn't really like, a Bitcoin voice and it was just super early, but all those CeFi collapses, like Bitcoiners were recommending against those. So what stands out and why it's such a big story and why it's so easy for, kind of adversaries to dunk on Bitcoiners now is because lots of Bitcoiners promoted Coldcard. Not everyone, by the way. Like, Swan never has, and I don't say nasty words about other people building in Bitcoin generally. I do have to kind of revisit that, frankly, in light of this, because I think there are some bad products out there in the Bitcoin space that have bad features and are putting people at risk. And it is definitely a consideration on how to get that word out, like whether and how to get that word out about some bad regulatory setups, for instance, of certain products in the space. It's hard because they're people that, we like. And, when I think of Coldcard, like, we deliberately didn't use Coldcards for Swan Vault because it wasn't FOSS, it wasn't GPL3. And, it's too small of a company and just wasn't appropriate to use as a signing device for Swan Vault. So we went with Blockstream Jade Plus. We know that team very well. They're kind of open. you know who they are. It's FOSS. There's lots of people that had audited their code base through and through. They actually had done entropy checks, and we had verified all of that. And it's just a different level. There aren't really other companies that qualify for that. You're basically looking at Trezor, Ledger, and Blockstream that make hardware devices that I think you could really say that's a company with a security budget and an approach that can be trusted with our clients' assets in our multi-sig collaborative self-custody setup at Swan Vault. So that's a hard spot to be in, because I like historically that Coldcard was out there and was building. I like that Foundation is out there and building, and kind of on and on and on. But don't trust, verify. And can you verify with a small team? What's good now is I think there's enough industry scans now going on that I think the industry will never let this happen again. And so, I think there are a lot of people running their own, Akimi attacks on everything that's out there, and nobody's going to accept this ever again. So I expect us to be like extremely comfortable that, 40 different people have tried to hack through these different code bases and they've come out clean. And, then I think maybe we'll feel comfortable adding a second manufacturer, for instance, to Swan Vault. But when we did the scan, actually it was our own read that we were better off with 2 Jades rather than a Jade and some other device, which is not something I would, talk about openly when we launched almost 3 years ago in fall of 2023, but again, that's what puts me in this kind of position where I'm like, maybe we do need to start being more open and holding other Bitcoin companies' feet to the fire and explain why we do things, and not leave out that we didn't think that other companies were mature enough to choose.
There's this thing I saw today, which I absolutely love. There are bug bounty programs. I come briefly from the IT security world, not as a technician, but as an account manager. So I'm not super familiar with the technical stuff, but I have a few nerds as my friends that are from IT security, that do white hacking, that do the bug bounty programs, and they live from bug bounty programs, which is a super fun thing to do, because they're basically hackers, but just on the good sides. And I think there's a really cool small side note, is like bug bounty programs should be a thing that all the companies should do, because they incentivize other people to find issues with their products and services, and instead of exploiting them and hacking them, reporting them and fixing that issue. It's a small side note, but just maybe an interesting thing for viewers.
Yeah, I mean, I do think a lot of companies use them. We have since inception, so we're probably 6.5 years into our bug bounty program, and they've caught little things here and there, and happy to have that conversation. We always verify whether it was real or not, and pay out if it was, which is great.
I have an androgen, as you might know from the previous experience, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And we talked about the Coldcard issue, like the full podcast on the previous one. And so he asked you, do you think the trend towards self-custody will increase or decrease as a result of the Coldcard hack?
I would say it'll be in the numbers you can tell right now, it's already a retrenchment and a move away from self-custody in the short term. But I think the midterm and long-term effect is going to be that we don't trust, we verify, and that a lot of people have gotten much more educated about how to do self-custody well, and will come out the other side of this actually being able to verify the setups that they have and knowing how to check for sure. And there's already lots of tools. We already created a tool from Swan where you can verify that you can actually download an HTML file that runs locally on your computer with the Wi-Fi off, and you can verify that your seed has entropy, that it's not bullshit. So I would say if you want that, we'll post it somewhere. But if you want it, while we're kind of just like putting the final touches on it before releasing, just email me, Cory@swan.com, Cory@swan.com, and we can share that with you. Again, run locally. Never ever expose your seed to anybody for any reason whatsoever. And then you can actually check your device and make sure it's running without actually inputting your own seed, which is probably even a better way to do it. And just make sure that it's generating keys that have real entropy that's claimed. So yeah, I think in the long run, this will just make it much easier and stronger, and make self-custody something that you can verify for yourself. And people will create tools in response to this. And a lot of people are hacking away at all these code bases and making sure that they are functioning in every way. And Blockstream Jade's gotten a clean bill of health, and Foundation got a clean bill of health, and I think you'll just see them continue to go through. And then there's always the stalwart since 2013 of BitGo, along with custodying crypto. I mean, it ain't going anywhere. And I'm very glad to have them out there. And, that's another great example of a place that people like, Jameson worked on their code base for years, and Reardon worked on their code base for years. And they invented essentially commercial use of multi-sig. And, the last I checked a couple of years ago, they were still something like 2/3 of all multi-sig transactions in Bitcoin were still BitGo wallets. So, I think it's a good opportunity to have a little bit of humility, understand that highly technical people are often a little bit mercenary when it comes to what they work on, and not as ideologically driven, and may just find the problem interesting. And that may lead them to seek careers where they work on lots of different interesting technology, even if it comes from shitcoin land, or it comes from a blockchain, but it's really just digital rails and different record keeping for on-chain tokens of real world assets or whatever. There are a lot of cryptography experts out there that are not focused uniquely on just Bitcoin. And just seek out some of those voices, and find those follows on X, and see what they're saying about Bitcoin, and see what they're saying about hardware, and just kind of broaden your perspective and understand that technical security and cryptography is involved in Bitcoin, but Bitcoin does not encompass all of the people and companies working on cryptography and security.
100%. I love that. Thank you so much, Cory, for being on the podcast. Before I let you go, where can people find you, ask you questions, and reach out to you?
Yeah. Well, look, I've made my email address rather public, and I think it's been very useful here the last few days. I actually started that at the launch of the campaign 2 weeks ago. But really, email me with question that you have, any way I can help. Cory@swan.com. And I'm Cory Swan on X, and those are probably the best ways to get in touch with me.
Awesome. Thank you so much, Cory, for being on the podcast. Thanks, and also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only, and does not constitute financial advice.